Share my screen one more time. Somebody unmute, let me know I'm good once this pops up.
Yes, people.
You good, bro?
Sure. All right. Order blocks. One of the easiest ways to wax the market's ass, family. One of the easiest ways to max the market's ass is on order blocks. All right. So what I want y'all to understand is, before I even show y'all on the chart, I want y'all to understand something like this right here. Let me find my tool real quick. Give me 1 second. Text. Where's my path tool? Oh shit, what is happening? My fault, y'all. My fault. I'll be on TradingView on my phone, family. I'm the type of person to mark up everything on my phone. That's why all these charts is blank. If we was on the TradingView on my phone, everything would be marked up to the T as far as what price you do for the next fucking 2 months. You know what I'm saying? But we want to pay attention to is, because since I can't find my tool and we're going to do it for time's sake, I'm not going to sit here and look for this tool. I want y'all to pay attention to, for the most high probability order blocks that you can find. I want you to pay, and for you to back test this strategy that I'm giving y'all, I want y'all to pay attention to areas on the chart where price just fucking goes crazy. You know what I'm saying? In a certain direction. You feel what I'm saying? So moves like this right here. You feel what I'm saying? Let's zoom in on the chart. Oh, that's the wrong button. That's why, my fault, y'all. All right, let's zoom in on the chart. And whenever we see certain moves, Jesus Christ. All right. So whenever we see certain moves like these up here, you feel what I'm saying? We see big impulsive candles. You feel what I'm saying? We see big impulsive candles. This move here. You feel what I'm saying? This move here, right? This move here, you know what I'm saying? Just moves that you see within the market. What you want to do is you want to pay attention to where that move came from. What I mean, where that move, what do you mean, Tracy? Where the move come from? You know what I'm saying? If this impulsive move started from right here, then that's what you want to pay attention to. Understanding that if the market moved right here, you feel what I'm saying? If the market moved in a very impulsive way from a certain area, that's because a lot of money was there. You feel what I'm saying? That caused price to move. You know what I'm saying? There was a lot of liquidity. It was a big pool of money in a certain area that caused price to move that way. You feel what I'm saying? In terms of the algorithm, because we know that that's not moving until motherfucking liquidity gets grabbed, right? So knowing that, right, that if price impulse away from us from a certain direction, it is very impulsive, we know why that happened. You know what I'm saying? We understand that there was a lot of money within that area that caused price to move in that direction. You know what I'm saying? So if we understand that, we want to pay attention to specifically where exactly that move came from, right? Where exactly that move came from. The reason being is that when price returns back up to that specific area that impulsive move came from, there's a high probability that she'll do the same thing all over again. You know what I'm saying? Especially if it's something like very crazy like this, these moves, when price comes back up to the area that it came from, if it's not going to grab liquidity, because, you know what I'm saying, obviously we have a very impulsive move right here, but price return to where it came from and wicks above the high before she continues going type shit. So price may be going to grab liquidity too. You know what I'm saying? But when it comes to order blocks entries and order block theories, you want to pay attention to the last candle in the opposite direction. You know what I'm saying? So I'm going to go ahead and make that make sense for y'all real quick. I just want to find a decent order block entry like this one here. Okay, this is a good order block. We're going to zoom in on the structure here. All right. And what I want y'all to pay attention to, this is not the best impulsive move, you feel what I'm saying? But you see how we have 4 hours worth of buying that takes out some structure on the way, right? We get candles that close above some structure, all right? So we have a nice little impulsive move right here, 4 hours worth of buying. Damn, I'm trying to grab my thing. 4 hours worth of buying here that takes out structure on the way. All right, cool. So now we get an impulsive move, you feel what I'm saying? So for this, because this is a bullish order block, you feel what I'm saying? This right here is going to be considered a bullish order block. What you want to do is you want to pay attention to the last candle, that last bearish candle before that bullish impulse. Let me find this on that lower time frame really fast. I ain't gonna cap, family. I just lost myself. I'm sorry. Give me 1 second. I shouldn't have did that. I lost where I was at. Let me find another example real quick. All right, back over here. We want to pay attention to is that last candle in the opposite direction, right? So I was going to go over this example, but the reason I'm not is because I was trying to refine this down. This is a big candle, you know what I'm saying? As far as the last bearish candle before the bullish impulse, this is an order block entry, but it's a very big candle, you know what I'm saying? And that's not the best example to give y'all as far as finding the order block. So let me give me 1 second while I find a very good example of what an order block is, like here. All right, so this makes a lot more sense. Okay, so boom, price comes down, we create support, right? Then price impulses away from support, right? So we have 1, 2, 3, 4, 5 hours of buying, comes up here and creates a high. All right, cool. So what we're paying attention to, because this is a bullish order block, is we're going to pay attention to the last bearish candle before the impulsive move. Mind you, we're paying attention to where this impulsive move came from. We understand that the reason why this buy move happened is because there was some type of money down here that caused price to move. You know what I'm saying? In terms of that algorithm, right? So we want to wait for price to return to where that area, return to the area that it came from, and more specifically being that last candle in the opposite direction. So you want to pay attention to the last bearish candle, because this is bullish, right? Pay attention to the last bearish candle before the bullish impulse. All right. So we see right here how we have, and let me color coordinate real quick, and I'm gonna annotate this for y'all as well, so everybody can be on the same page. Cool, cool, cool. Boom. This is a bullish order block. OB stands for order block family. All right. Oh, hold on. So we have that bullish order block. Why? It's the last bearish candle before price took off. You feel what I'm saying? Before price gave you an impulsive move, she gave you that last bearish candle before the bullish impulse. So when it comes to order blocks, you want to wait until price returns back down into that last candle she was paying attention to. You feel what I'm saying? So you see how price comes back down into the last bearish candle before price took off, comes back and smacks the high of that candle, and then continues where the fuck she was going. You know what I'm saying? So order blocks, you want to look for impulsive moves within the market. And mind you, you know what I'm saying, there's going to be order blocks all on your chart. You need to be able to differentiate what order blocks you take. That's more smart money advanced. You feel what I'm saying? I got to learn the basics first. But understand that there's going to be order blocks all over your chart. What's this right here, right? The last bullish candle before a bearish impulse, right? So this last bullish candle right here is considered a bearish order block, right? So if I highlight this candle, price didn't return to it. I thought this wick returned to it, but it didn't. It came close, but it didn't return to it. So I'm going to delete that. All right, but you want to pay attention to the last candle in the opposite direction before that move happens. So you see how price comes back down, returns back down to that candle specifically. You feel what I'm saying? And then buys up for the buy. So it should continue in the direction that it came from. You feel what I'm saying? Let's find another example of an order block here. You also want to pay attention, like when it comes to order blocks, like the next candle that it forms. You feel what I'm saying? So we're looking at this candle right here, this bearish candle. I mean, this bullish candle here. I'll highlight it. Looking at this bullish candle right here, right? Before price does this drop off, right? Order blocks can also be gone off of, right? If the next candle takes out the low of this candle. You feel what I'm saying? So we have this bullish candle, then we have a bearish engulfing candle right afterwards. You feel what I'm saying? So whenever you get like an engulfing candle after a specific candle or something like that, that validates the specific candle to become an order block, if that makes sense, family. Please let me know if I'm confusing anybody, or drop in the chat or anything like that. Please make sure that we're all on the same page. But the fact that we have this bullish candle right here, the next candle is a bearish engulfing, takes out the low of this bullish candle, it validates that candle as an order block. And if I highlight the candle, you know what I'm saying? So the impulsive move that happens to make an order block, it doesn't have to be super OD, you know what I'm saying? But the most high probability ones are going to be off of moves that are very, very, very impulsive. right? But this right here is the last bullish candle before price started to sell, right? So if I highlight this candle right here, price returns back into that candle. After she breaks the low of it, she returns back into that candle, sells off. You know what I'm saying? Sells off. Let's find more examples. All right, bullish candle. We have the last bearish candle here, right? So we have a bearish candle right here before price buys up, right? So we have a nice bullish impulse. You want to pay attention to the last candle in the opposite direction, right? So we have the last bearish candle before price buys up, bullish order block, right? Highlight that candle, wait for price to return to it. There's your buy. There's your buy, ride it up. You feel what I'm saying? We can do this all day, all night, family. Order blocks pop up on charts all day. You feel what I'm saying? Like it happens all the time on every single time frame. You feel what I'm saying? So if you're able to identify these specific candles, you'll definitely be able to wax the market's ass. And I ain't gonna cap. We have the last, I'm trying to see this structure right here. This is what I'm looking at. Boom. And sometimes it should be ugly. You feel what I'm saying? Sometimes it should be ugly. That's not an order block. I was trying to see if price came to that high and did what it was supposed to do. That wasn't an order block, family. All right. See if I'm trying to find more order blocks on the way, right? Because it happens all the time within the market. You just want to pay attention to small little impulses or big dog impulses that happens within the market. All right, so let's go back in time a little bit. Let's come down to a higher time frame. We go to the 4 hour. All right, here, right down here. All right, we have structure right down here. All right, so what I'm doing is I'm paying attention to this wick right here. We're looking for the last bearish candle before price started this impulse. Where is that at? Here. All right, so we got that last bearish candle before price started to buy up. Highlight the candle. Price returns to that candle. There's your entry for the buy. All right, wick entry, no drawdown really whatsoever. You riding that shit up. You know what I'm saying? Bearish last bullish candle here before the bearish impulse, right? Highlight that specific candle, last bullish candle before price started to sell. Sell entry, all right? You was blue for a little second. Last bearish candle here, right? Before price gave you this bullish impulse, right? Here, returns back into that candle, buys. All right, there's your buy entry right off of the bearish candle. Now, specifically on this example right here, what I want y'all to pay attention to is because you may be like, damn, Tracy, you feel what I'm saying? Some candles have a lot of wicks. You feel what I'm saying? You told me to pay attention to the bodies, right? Cool. So when you have a candle that has a lot of wick on it, which I want y'all to do, family, is mark up that candle specifically from the body to the wick. You feel what I'm saying? So you see how on this nasty ass candle, you know what I'm saying, this bearish candle here, we got a lot of wick to the upside. All right, so let me pull up my arrow real quick so we can see what I'm talking about. All right, this last bearish candle right here, you feel what I'm saying? We got a lot of wick to the upside, but the candle closes all the way down here type shit. So I'm going to draw my box from the wick to the body. All right, so we get that little picture perfect just like that right there. And you see how the wick comes down to the body of the candle because all the volume is at the body of the candle. If this candle ain't had no wick on it, we would have had a precise entry and we wouldn't have to worry about shit as far as where to get in at because the candle ain't got no body. I mean, the candle ain't got no wick. But since it does have a wick, you want to pay attention to the wick of it and the body. You know what I'm saying? Sometimes price will hit off the high of that candle. Sometimes price may just hit off the wick and keep pushing for the buy. Sometimes price wants to come down and smack the body of it. So it's all about what price wants to do in that certain case scenario, but you want to pay attention to that whole area and inside that candle, right? Just keep finding more order blocks. And like I said, family, if you have any questions as I'm going on, feel free, please. All right. Last bullish candle here, right? Before price sold off, mark it up. All right, so price didn't reach it there, so that's not a good example. But last bullish candle here, all right, before price sold off, right? More specifically, let's see which one she activated. Let's move this box down a little bit. bit. Boom. Right. So we see this last bullish candle right here before the impulse, price stopped short right here. But look at this candle right here. This real last bullish candle before price did this sell move here. Look how small that candle is. Look how refined of an entry you could have had just getting in on a little ass candle like that. You feel what I'm saying? Last bullish candle, that motherfucker small as hell. So let's refine this box all the way down and make it as small as that candle, just so y'all can see the importance of order blocks and the importance of your entry. You feel what I'm saying?
I have a question.
Yes.
So when you're measuring out your order block zone, you are definitely including the wick and the body. Is that correct? Yeah. Okay. Great. Thank you.
Definitely incorporating everything. The reason behind that being is like I said, sometimes price peep how this candle has a little wick. You know what I'm saying? This little bullish candle does have a little wick below it. Sometimes price may just want to smack off the wick and then keep it pushing. Sometimes price wants to come up to the body. Like if I look at this specific order block right here, and I'll highlight like the body of the candle. See how that wick comes right to the body of the candle? You feel what I'm saying? It turns around. That's where all the volume's at. You feel what I'm saying? That's where we need to be paying attention to. So yes, we're going to be paying attention to the wick because sometimes price don't want to touch the body. She'll just off the wick, keep pushing. But if price starts to dig into this order block, like imagine what you'll be thinking as you're trading order blocks. You get in as soon as price smacks off the low of this order block. So you get in. You feel what I'm saying? But then you keep getting drawdown. Price keeps going higher for the second being. You understand where the body of the candle is. So now you understand where price should potentially keep going, where price should stop at. You feel what I'm saying? And where you could potentially get another entry at. You feel what I'm saying? The fact that we know about these different areas on the candle, as far as what we pay attention to, it gives us better analysis and it doesn't scare us if we take drawdown. Because like I say, sometimes we pop early and we don't understand where price is going to for it to stop at. So not knowing this may scare us and they got them closing out our entry or whatever the case is. But well, another thing that I want y'all to peep is your risk to reward and how great that can be on this trade. So look, this little ass got them candle. That is a 16 pip candle. Your TP1 should automatically be down here at these lows right here for 119. So that's like 1 to, I'm not even good at math. You know the risk to reward is OD. You know what I'm saying? You get the ratio. You get what I'm trying to say. It's ridiculous. You know what I'm saying? So that's what you want to pay attention to. Look at this candle here. Last bullish candle, bearish impulse. Mark it up. Now, and when it comes to your parameters, when it comes to order block theories, right? Your stop loss is going to be at the high of the candle. At the high of the candle, not 10 pips above the shit, not 5 pips above the shit, right at the high. You feel what I'm saying? Right at the high. I'm putting my stop loss dead ass right there at the top of that candle. I'm putting my stop loss dead ass right there at the top of that bullish candle. If price comes and violates the high of this candle, because this is bearish order block, so if price comes and violates the high of this candle, the high of this candle, you feel what I'm saying? Then the order block is no longer valid. You feel what I'm saying? She may be reaching to grab liquidity above this high or above this high right here. But the order block theory is no longer valid if she violates the high of that candle or the low of that candle, but we talking bearish. You feel what I'm saying? I mean, bullish. So your stop loss is always going to be at the high of the candle or the low of the candle, depending on which side of the market you're taking it to. And you can peep how your risk to reward is going to be every single time. Like from here, if you would have caught an entry here and pay attention to this right here as well. If I mark up the body of this bullish candle, that's where price stopped at. That's what price stopped at because all the money is at the body. You feel what I'm saying? So now if you would have known that, pay attention to this order block and where the body's at, look what your risk to reward could have been then. You would have gotten a sniper entry, putting your stop loss right there at the top of the motherfucking wick. Right? For 9 pip stop loss, ride it down and you caught that whole impulsive move. You caught that whole sell-off. Just paying attention to order block theory. You know what I'm saying? Understanding where prices may go to, where price may stop at. And now combine all this with liquidity, right? Combine all this with the fact that price keeps goddamn wicking below highs and wicking below lows all the fucking time. You know what I'm saying? Like combine all this with everything that I'm teaching y'all tonight. And this should start to unfold on the new way that we look at the market. You know what I'm saying? We should already start to see that the market moves not how we was taught. You feel what I'm saying? Just based on what I'm telling y'all tonight. Order blocks, right, is a very, very, very easy way to capitalize on moves within the market. You know what I'm saying? It's all about being on the right side of the market. You know what I'm saying? Doing your top-down analysis from the monthly all the way down here. You know what I'm saying? Understand that everything we do with smart money is based on higher time frame. You know what I'm saying? Your trades need to be based on the monthly and the weekly time frame. And that may scare y'all. You know what I'm saying? I was scared of that when I first started trading, because monthly and weeklies, that shit sound like it's gonna take a whole fucking year for a move to play out. You feel what I'm saying? So why the fuck would I be looking at that time frame? But understand that the algorithm, central banks, interbanks do not scalp. That's retail shit. You feel what I'm saying? Retail shit is scalping. Not saying you can't make money off scalping. If you trade smart money, you can scalp your ass off and be in and out the market. But that's not something that interbanks do. That's not something that central banks do. It's not something that the algorithm is based off of. Everything is based off that higher time frame. Banks that are getting into the market, they're what's called position traders, right? They hold forever. You know what I'm saying? They looking to hold like on some investment shit. You feel what I'm saying? They're holding for months in, years in type shit. So all their trades are based on the monthly and the weekly time frame. And if we're trading with the banks, we're trading with the algorithm, then we need to be approaching the market the exact same way. So every single trade that we take needs to be based on the monthly and weekly time frame. Definitely go over that a little bit more this weekend as far as getting a top-down analysis in, you feel what I'm saying, and understanding where the liquidity is at, understanding which way you should be looking to take the market. But once you have a bias based on that higher time frame as to if price should be bullish or if price should be bearish, right, then you can look to take the market in only that direction. Like, for example, if the higher time frame is telling you to sell, then you should be only looking to what? Take bearish order blocks. You feel what I'm saying? Bearish order block. That's just what you should be looking to do. You know what I'm saying? But order blocks and liquidity, you feel what I'm saying? That's just like the basics to smart money. You know what I'm saying? This shit happens all the time within the market, all the time within the market. So as long as you can understand where highs and lows at and understand that the market does move to, in fact, grab nigga stop losses, we can get that in our head and just wait for price to give us reactions after shit happens. This high right here, she comes up above the high, you wait for that reaction, see that impulse, confirmation. You feel what I'm saying? Like, this is how the market moves 24/7. So yeah, this should be like y'all starting point as to understanding, you know what I'm saying, what the market has going on at all times. This right here, order block as well. Last bearish candle here, stretch it out. Boom. That last, zoom in a little bit. Y'all can see what I'm talking about. Bearish candle, last bullish candle, bearish impulse, takes out this liquidity, right? So we have a high right here. This is where confluence comes into play. And I don't even want to confuse y'all tonight. So I'm not even going to go too deep into this, but this is where confluence comes into play. Putting both of the shit that I taught y'all tonight into one trade setup. We understand that above every single high and below every single low is what? Liquidity, right? There's stop losses above untapped highs and stop losses below untapped lows. So if we know that and we understand that the market literally only moves to grab liquidity and the market literally only moves to hit your stop loss, then can we combine liquidity with order blocks to be able to understand where the high probability order blocks are? Yes, we can. If we have a high right here that has not been tapped yet, and there's an order block right above price, and we understand that price moves to grab liquidity, right? And you can start measuring shit out. I gave y'all the rule as far as how many pips shit should go, right? All right, boom. We have a high right here. How many pips above this high is this order block? All right, so that's a little bit higher. All right, so I ain't gonna use that specific example. I ain't gonna use that specific example. All right, but we do have a high right here, and we understand what's above this high, right? So we understand what's above this high, and there's an order block right above this high. So we understand that untapped highs and untapped lows within the market is a big bullseye for price, and there's an order block above a high or below a low. And we understand that the market isn't going to give us an impulsive move until liquidity gets grabbed. And we understand that order blocks are a very high probability thing to take within the market. Then we can combine all that shit. You feel what I'm saying? We understand we have a high right here, hasn't been tapped, hella money, liquidity pool above this high. Right above it as well is an order block. So now we can start to understand that price comes and takes out this high and we get a stop run. We have an idea of where price should stop at. You feel what I'm saying? Where we can get our sell at type shit. So your most high probability order blocks are going to be where the liquidity is, where the liquidity pool is. You feel what I'm saying? Above this high is a big liquidity pool of price, a big liquidity pool of money. It's an order block right above it as well. So we know that if price comes up and takes out this high, where she should stop at. She should come up here and hit this order block. You feel what I'm saying? And you see exactly what happens. You see that impulsive sell-off after she takes out this high and comes up and hit this order block. Impulsive move. You know what I'm saying? See, most high probability order blocks within this market are going to be where the liquidity is at. So the first thing I want y'all to do as far as back testing this call that we done did tonight is go on your charts, mark up highs and lows, right? And watch how price digs above highs, digs below lows. Low right here. Oh shit, wrong button. Sorry, y'all. All right, that's the first thing we're back testing this smart money shit I'm teaching y'all tonight. We have a low right here, smack they shit. After they smack their shit, boom, goes higher. You know what I'm saying? Like, I want y'all to be able to identify liquidity runs like this and how the market is only moving to got them go above and below highs and below lows. You know what I'm saying? High right there, smack, goes lower. Smacked again, goes lower. Right? It happens all the time. High here, smack, high here, smack, impulsive move right after. Happens all the time within the market, family. So that's the first thing that y'all want to do as far as learning what I'm teaching y'all tonight and being able to see it for yourselves. You know what I'm saying? Mark up highs and lows within the market and watch when price returns to these highs and lows, watch the reaction that price gives you. You know what I'm saying? Off the shit I taught y'all tonight, y'all should be able to understand if it's a continuation in price, if price is going to continue buying versus if it's just a liquidity run because of the reaction that price gets. We get a high right here, price comes above the high. But do we get a wick? Do we get anything like that? You feel what I'm saying? Like, no, she keeps it pushing for the buy. You feel what I'm saying? I'm talking about right here. All right, we got that high right there. You may be expecting a liquidity run, but price doesn't give you any reason to expect that it should turn back around for the sell. You feel what I'm saying? Doesn't give you any reason to expect it. That keeps it pushing. So when it comes to you understanding if it's going to be a liquidity run versus a continuation of price, it's going to tell you that. You feel what I'm saying? That's what I told you at the beginning of the call. Price is going to let you know what it is. It's all about you being patient and waiting for price to play out. You feel what I'm saying? Who cares if you missed a sniper entry? You feel what I'm saying? Like, there's a high right here. You're trying to get in. The whole thing about smart money is getting in where retail stop loss is at. That's where our entry's at. You feel what I'm saying? So who cares about getting in at the sniper entry right here to catch this whole bust down? You feel what I'm saying? As long as I know that this move right here was a liquidity run, you feel what I'm saying? And price gives us this move right here. I don't care about this being a sniper entry. This is my confirmation that price wants to go lower. I'm just looking for a retracement at that point. You feel what I'm saying? I'm just looking, I ain't looking for nothing but a retracement. So who cares about that sniper entry? The impulsive move that happens after, if you can't catch the sniper entry, the impulsive move that happens after in either direction. So even over here, who cares if we can't catch this move right here, down here at the sniper entry? That impulsive move up is your confirmation that price is going to buy. You wait for a retracement. You feel what I'm saying? You wait for a retracement every single time. If you can't catch a sniper entry, wait for a retracement. 9 times out of 10, price is going to give you to you. It will be certain case scenarios when price gives you a liquidity run and then does not give you an entry at all, just keeps it pushing. You feel what I'm saying? And that's okay. It's just a mistrade setup, but you understand why that happened. You know what I'm saying? But 9 times out of 10, once price got them grabs liquidity and she impulses down or impulses back up, she's going to give you some type of retracement. You just need to be patient and wait and plan out where you're going to look to get into the market at. No matter if it's an order block, a fib, some type of fib entry that I'm going to teach y'all later on this weekend or whatever. You feel what I'm saying? You need to have that all planned out. All right. So does everybody understand these order block theories that I'm teaching y'all tonight? Does everybody understand what an order block is? Do we understand how to capitalize on the order block, how to get into the market, how to identify where the order blocks is, and where the most high probability order blocks is as far as liquidity goes? Drop a 1 in the chat if we gravy.
Tracy, I have a question.
Yes, ma'am.
For the order blocks, I saw somewhere where they said it comes to 50% of the last buying candle or the selling candle. Is that correct?
That's deep sauce right there. That's a little bit deeper sauce when it comes to, so since you brought that up, I'll get at the y'all real quick. Every order block that you draw, right? So this comes back to, remember how I told y'all earlier that price may want to come and smack the body of the candle instead of the low. You feel what I'm saying? It's 3 different areas that you want to pay attention to on the order block to get your entry. All right, 3 different areas on the candle itself. All right, so let me find a decent little order block candle. We're gonna look at this little small candle right here. We're gonna zoom in on it though. There's 3 specific areas that you pay attention to on every single order block that you draw up. All right, so we're looking at this small candle right here. Even though it's small, we're still going to mark it up exactly what we need to look at. It's 3 specific areas. The first one being the low of the candle or the high of the candle, depending on if it's bullish versus bearish. This is a bearish order block. So the first area you want to pay attention to for entry is the low of that candle. All right. Second area is going to be the body. Right, it's going to be the body. We understand that all the volume is at the body. And the third area you want to pay attention to is the 50% range. This is what is called equilibrium. Right, this is what's called equilibrium. For whoever asked that question, right, what you want to do is you want to draw your fib on the candle itself. Right, and you don't even have to have a smart money fib just to do this, because all you care about is the 50% range. That's all you care about. You know what I'm saying? So when it comes to every single order block that you draw on your chart, or every single order block that you pay attention to on your chart, I want you to draw a fib from the high of the candle to the low of the candle. All right. You're only going to do this for a couple seconds just to find out your 50% range. I don't know why my fib isn't giving me what it needs to be giving me. Hold on. There we go. All right. So you're just doing this real quick just to find out your 50% range of that candle, that halfway mark. All we care about. Once we get that, you can delete your fib. You can get up out of here. All right. So that 50% range of that candle is big sauce. You know what I'm saying? This, for example, right here, she didn't come up and hit 50. You know what I'm saying? But there will be a lot of case scenarios where price will dig into an order block. You know what I'm saying? Like price will do some shit like this right here. Let me see if I can find my tool. 1 second, family. Okay. All right, cool. So price will do some shit right here. Price will bust down, she busts down off the order block. So this right here is your order block. Price will bust down. But when she gives that retracement back into it, mind you, you popping right here. You know what I'm saying? As soon as it comes down to the low, that's your first entry. She keeps it pushing down up into the body. That's your second entry. She may not be done digging into this candle. So that 50% range, that halfway mark of your candle, is that third area you want to pay attention to as far as price goes, as far as where price may retrace to inside the order block. All right. That 50% range, market loves equilibrium. I told y'all that the market is based on numbers and it loves balance. It loves 50%. It loves equilibrium. You know what I'm saying? So when I say equilibrium, I mean 50%. I mean halfway mark. You know what I'm saying? When price returns back up into this candle, if price violates the low of that candle, violates the body of that candle, you want to pay attention to that halfway mark. Price is going to stop right there. And when it comes to order blocks, is like 70% of the time, it's either going to be like 1, 2, or 3 type shit. You know what I'm saying? It's either going to be, it's either going to hit off the low of the candle, it's going to hit off the body of the candle, or it's going to hit off the 50% range. You know what I'm saying? There may be certain case scenarios where she digs a little higher. You know what I'm saying? When that happens, you just want to pay attention to price. Remember what I told y'all earlier? As long as the high of the candle does not get violated, the order block is still valid. You know what I'm saying? So if that 50 starts to get violated, you just want to, like, you know what I'm saying, zoom in on price, start to watch the trade, make sure, you know what I'm saying, price ain't going to take out the high. You know what I'm saying? But these are your 3 different areas you want to pay attention to on price. So let me see if I can find really fast. I ain't going to spend too much time on it, but let me see if I can find an example of price really digging into an order block. And now that I'm sitting here thinking about it, I remember a specific setup that I was going to go over with y'all that I just need to find. If I can find it, I'll be able to go over with y'all real quick. Where was it at? Where was it at? 1 second, family. I'm sorry. Or I may not be able to find it. But what I'm trying to do is find a specific example of an order block that gets dug into. You know what I'm saying? It gets dug into well over 50%. You feel what I'm saying? I mean, well over like the low of the candle type shit. So we can see how price reacts off of 50% of an order block. If I can find one. I don't know if I can find one in time, family. I don't want to spend too much time trying to find one for y'all. What I can do for y'all specifically is, though, what I'll do for y'all, is this it right here? No, it's not. Okay, so what I'll do for y'all is, after the call is over, because like I said, I don't want to spend too much time. I have y'all. I know some of y'all is like fucking 4 or 5 in the morning where y'all at. So I ain't gonna spend too much time trying to find a specific example. What I'll do is, after the call is over, I'll make it my own homework to go on these charts and find examples of when price bounces off of 50%, I will drop a video inside the bootcamp chat explaining what is going on, referring back to this video right here, and I'll drop it in the chat so everybody can see what I mean when I say that 50% range getting smacked. All right, so I'll make that my personal homework. And let me see if this right here is it before I even say that. Boom, boom. Look at this area right here. I'm looking at is this candle, bullish candle. All right, so we have this last bullish candle right here. Let's see what this candle right here is talking about. Let's see what's going on here. All right, so you see how price is digging into this candle for real, right? We see what's going on, right? You can already see this box right here is like strictly on 50%. You feel what I'm saying? I really don't even have to draw a fib for that, but we're gonna do it. Draw your fib from the high of the candle to the low of the candle, or the low to high, whatever the fuck, doesn't matter. See how my box is right there on that 50 line. Let's zoom in a little bit so we can see exactly what I'm talking about. See my 50 line. It's a little blurry, so let me goddamn do this. Stretch this out here. We change the color of this so everybody can see this. Make this black. Make this color thick. All right, so we all see that 50% range of this candle. Now I can delete my fib. I don't care about this no more. And look at the reaction that you get off price. You know what I'm saying? So this is exactly what I was talking about when I say that, boom, you get your first entry at the low of the candle. So here's your first entry right here. You know what I'm saying? You get your first entry, price starts to bust down. All right, cool. And she starts digging higher into the candle. Now, if you didn't know about the 50% range of that candle, this move right here could have scared the fuck out of you into closing out your entry. You feel what I'm saying? Like if you didn't know that price likes to come up to 50%, that shit would have scared you out your entry. You might would have closed out this shit. You seeing too much drawdown right here, depending on how you trade. You feel what I'm saying? But understanding that when it comes to that order block, it's either gonna stop at those 1-3 areas that I told y'all, being the wick, the body, or the 50% range. Understanding that once I start seeing drawdown on this entry, I'm drawing my fib and I'm paying attention to what price does once it gets there to that 50. I'm gonna pop me another entry. It's like, here's a perfect example of price reacting off the 50%, excuse me, of the order block. So yes, ma'am, you were 100% right. This right here is a perfect example right here. Every single order block that you see, draw a fib on it and mark up your 50. Just in case price wants to come up here and smack it. You can be ready for it. You won't be scared, and you'll pop another entry type shit. You were 100% right. And I'm glad you brought that up. Thank you. But does everybody understand this 50% range? Drop a 1 if we get that. Cool. All right. So, like I said, family, we definitely have, you know what I'm saying, the basics of smart money, these first 2 concepts that I gave you all tonight. First of all, before I even say that, does anybody have any questions on anything that we went over tonight? Anything at all? You know what I'm saying? Make sure that we understand everything that I've taught y'all. We have any questions, or if we don't, drop a 2 in the chat if I did my job. Because if you don't have any questions, that means I did my job. So drop a 2 in the chat if you understand everything that's going on. If you don't, please unmute your mic or drop it in the chat, ask a question. But let me know that we all understand what was taught tonight. There's no confusion or anything. Two. Cool. Liquidity runs with SPY. It happens all the time, my boy. This is the starting step to being able to understand how this market really moves. That's all the market does. You feel what I'm saying? The market goes from high to low. It smacks your shit. Happens all the time. All you need to do is understand where the liquidity is at. Run shit is gonna be very, very easy. But this is the first, this is like the first stepping stone. You feel what I'm saying, to understanding what price does. Let me stop this recording real quick so this shit won't be too long for everybody. I'll just talk to y'all.